Unchanged
Oh,
at
good afternoon and
0.9% as
welcome
expected,
to,
unchanged
sorry, I'll
at
just turn
19
that.
basis points.
There we go. Sorry, just turn the squawk off. Good afternoon and welcome to HYCM's online trading workshop with myself, Giles Coughlin. Looking forward to taking you guys through ahead into the next hour as we look at, really what's moving the market at the moment and what the present drivers are. Just going to say hello to folks as they come in. Hi, Ali, Fahana, Sammy, good to see you. John, hey, good to have you on board. Salvatore, Ramda, Van, Veach. Oh, good. Got some good familiar faces here today, which is lovely to see. And we're at a very interesting point in the market at the moment. We're got quite a light data week, and the US-China trade negotiation tariffs deal is really at the forefront and the focus of the market's mind at the moment, and that's really what's driving sentiment. So I'll be taking us through and explaining some of that market dynamic which is going on, so that we're aware of what's really moving the market at the moment. Hi Selva, good to have you on board. Just going to go through the disclaimer. One of the things that I need to make clear, particularly if you've just joined us for the first time on this webinar, the whole purpose of these webinars is to do with training and educating so that you can see the thinking process and the criteria that a professional trader makes when they're looking to develop a bias for a currency direction or a commodity direction. So what this isn't a trading signal service where I say, buy this instrument or sell that instrument. The whole idea of this is that it provides an educational framework for you to begin to make your own trading decisions, so then you have confidence and a competence as to why the market is moving in certain directions, and that obviously comes from experience, it comes from time, and it comes through practice. So the whole idea of this workshop is just to outline some of those skills, and a number of the guys here have been attending these workshops and webinars for months now, and are continually putting that into practice. And eventually they won't need someone like me, because they will know the reasons why the market is moving, and they'll have their confidence and competence gained through experience. So if you just joined us for the first time, even though we might be talking about different currency pairs, different entries, exits, please be aware that this isn't a signal or a trading service, it's an educational service, so approach it that way. Okay, don't forget, during the course of this workshop, one of the new features that I've been doing for a few weeks now is be looking at individual trades. So if you've got a trade you're looking at taking, or a trade that you're in, we'll have a time to share that towards the end of the workshop. So, feel free to type any questions in about any trades that you're on. We've got the question panel, which is on the GoToWebinar control panel. There's a section that says questions. Just click on the questions triangle, and you'll see that you can write questions and type in your questions there. And any trades you want to take, just pop them in there, and I'll pick them up later on during the webinar. The session ahead, we're going to be looking at the handout. So the handout is found again on the GoToWebinar control panel. Just click it, there's a handout, it says workshop guide November the 5th. If you click on that, I know this is an older handout. I've just really landed from coming back in Malaysia last week after a bit of illness. So we're not going to be doing this special topic. We're going to be looking at a different one. We're going to be looking at trading election polls on the pound. So it's something that's relevant and useful, and I'll just be showing you how traders are using election polls at the moment to make trading decisions on the Great British Pound. Aside from that topic there, the rest of these headings we'll be looking back, looking forward, looking at the charts, looking at your risk, looking at the outcome of your trade. We'll be using this as the skeleton for our decision-making process, and it's a process which I use day to day now, due to just the repetition of this. This has become internalized in my trading decision making. So this is what I've written down for us today. The trading the UK polls, that's our special topic. We'll start off the webinar looking at that. The handout for the session is there. You can print it out, download it, and the idea is you can keep it by the side of your desk. So if this is your first time you've joined us for the workshop, just you can print that out, put it by the side of your desk, and these 5 topics should guide you as to there's relevant questions that it asks you to try to get you engaging with the market. Any suggestions for topics you have, email me there directly or drop me a message on the Telegram channel. For those of you in the Telegram channel, we can look at specific topics for future workshops and webinars. Always happy to look at something specific that would help you guys. Very happy to do that. So without further ado, we're going to get into using the election polls to trade the pound. Now, the latest on the Brexit. Brexit has gone from sort of headline Brexit trading to a focus now on a general election for December the 12th. That is now what the market is focusing on in trading the pound. And these corresponding lines are the result of a YouGov poll. This is part of the UK government infrastructure in the UK, and they release their data every few days. You get the latest poll data, and you can see how the polls have been tracked since January 2018 and beyond. Now, the elections are due December the 12th, so the market really wants to know which party is going to have a majority. Now, as long as this party, the Conservative Party, remains in a majority, that is supportive for the pound. UK PM Johnson is the leader of the Conservative Party. And as long as the Conservative Party has the lead in the polls over the other parties, that means a Conservative majority-led government is more likely. That means that PM Johnson is more likely to get his Brexit deal through Parliament. It's more likely to be some kind of deal as a result of a Brexit arrangement between UK and the EU, and then is supportive of the pound. That is why, when at the start of the week there was a series of 3 polls, and those 3 polls all showed a Conservative lead over a Labour government in second place. So that's why we've been seeing some bids in the pound. Now, the key thing in trading election polls for the UK is this: if that Conservative lead falls, so say for example a new poll comes out, the next YouGov poll comes out tonight at 9 o'clock GMT, and say that poll comes out and the Conservative government, they had a 45% lead over Labour's, is at about 27-28%. Say for example it dropped 5% and it went down to 40%, and then the Labour government lead went up to 33%. That would suddenly show a contraction between the two parties. A Labour lead would be seen as negative for the pound. It would be seen more likely there's a hung parliament at the election, so it would result in pound weakness. Say at 9 o'clock tonight we got a Conservative party had a further gain, say 48%, and maybe Labour took another loss, another drop in the polls down to 25%, then that would be supportive for the pound. So what we're looking here for is the very simple factor. If the Conservative government is seen to be in the lead, supportive for the pound. When the Conservative government is losing the lead, that is negative for the pound, as a hung parliament is seen as more likely, a no-deal Brexit is more likely, and so the pound will be sold off. So that's the focus at the moment. Until December the 12th, that will be the overriding focus for trading the pound. So if we look at the pound currency pair, we'll just pull up the pound here. We can see that on the pound US dollar pair, we've been stuck in this range between 1.2800 and 1.300. So we had a 1 second, arguably a third test of that 1.30 region. We've got key support down here at 1.2800 on the daily chart. So going into this evening, that is the range that we have between 1.3 on the upside and 1.2800 on the downside, and I'm expecting the pound to be bid because of the Conservative Tory lead in the UK polls. As long as that poll remains, then any pullbacks in the pound I am expecting to be bid. So, you know, another pullback down to 1.2900, I would expect that to be bid from these levels. I'm expecting buyers based on that poll data. Now, what's key for tonight is we have some event risk, and the event risk tonight is this. There is a television debate tonight. It's the first one. It's on UK terrestrial television, ITV, and it's between Jeremy Corbyn and PM Boris Johnson, which will be at 8 o'clock. So notice that the latest poll, the latest YouGov poll, is 1 hour after the TV debate tonight. So at the moment, the pound is obviously focusing in on this event risk. So the concern is, obviously with a television debate, has a wide coverage, and the potential for TV debates to sway the public is obviously very high. So there is a strong event risk for the pound. And obviously with a poll coming out just 1 hour after the start of that debate, the kind of potential impact of that debate will be talked about. It will be on media outlets. It will be all over social media. It will be a real focus in the UK and across the world, because everyone wants to know, well, who is looking like they're going to do a better job, Jeremy Corbyn or PM Boris Johnson? Now, in the UK, Boris Johnson is pretty popular. He has got more popularity than Jeremy Corbyn. Jeremy Corbyn has some very sort of left-wing politics. So for the Labour Party, he's a big swing to the left for the left-leaning Labour Party. So he has some extreme politics for Labour candidates, which means he essentially has less appeal. So obviously for some people, he's more appealing because he's seen as being more kind of true to Labour principles. But obviously for other people, he's seen as too extreme. And generally, the people in the UK are preferring Boris Johnson to Jeremy Corbyn. However, with a televised debate, public opinion can sway. Now, obviously, I'm not making a political statement here. I'm simply just explaining what the situation is. So the risk is tonight, if Jeremy Corbyn gains in more popularity tonight, say he does a very good interview, or Boris Johnson says something very silly or gets caught out and loses some popularity, then that would be negative for the pound. So for this pound rally to keep going and for it to break over 1.300, we really need to see some kind of a gain in conservative support, I think, to really take on that 1.300 level. Otherwise, deeper pullbacks with bids found at this 1.2800 level looks a key area for bids at the moment. So we're sort of stuck in a range at the moment with the pound. That is the poll and the TV election tonight is going to be key. So for all you pound traders out there, 8 o'clock tonight will be key, and 9 o'clock tonight. So keep your eyes peeled and focused for the pound this evening. I'll also give you some, I'm just going to give you the, I'm going to send you a link, and the link shows you where to get the political trackers. Okay, so you can see the, so I think it's this one here. That's the YouGov update. I'll just send that to you. Yeah, there we go. And then this one is the poll of polls. So that is a poll of polls. And I'm sending that to you as well. So you have the access to it. And in case you can't find it, you just go to YouGov, political trackers, just whack it in there. There you go, YouGov political tracker. And you should see the, if you go to the home page and you just go onto the political tracker there, and there, that's the 14th to 15th November update, and there is another one coming out tonight. So you can find all the up-to-date poll information there. Obviously, for you guys who have a Squawk, you will get reports on the Squawk updating you when these polls are released. So that's somewhat easier for you guys. You don't need to worry about chasing them up. Although I still like to see the information myself. It's nice to, you know, it's nice to be able to see the charts and just to get some kind of sense of what's going on. And there's also some other interesting statistics there in the UK, which you can have a little explore about as well. Okay, so that's the big issue with the pound. Now, as I said, we are in a very quiet data week. So it's times like this when you don't want to be giving back the money you've earned back to the market. It's very easy to do it. There isn't very much scheduled events really on this week. I think we've got like CPI data out for Canada and retail sales out for this week, which is, you know, probably the largest scheduled event this week. But aside from that, what the market is really focusing on is the US-China trade talks, okay? Now, the mood at the moment is in a kind of cautious situation. Yesterday, there was a switch to risk-off mood when there was, it was a reporter from CNBC, Eunice Yoon, where she said a government source had told her that China was troubled after Trump said no tariff rollback. China thought both had agreed in principle, and strategy now to talk but wait due to impeachment, US election, also prioritize China economic support. So this mood in Beijing about trade deal is pessimistic. So the frame of reference yesterday was pessimism. And what we saw on this pessimism, we saw some risk off tones coming into the market. And I'll show you when this tweet was released. It was around this time, around midday yesterday, and there was some strong risk off tones. We suddenly saw the pound, we suddenly saw gold rather being bid on that news. Now here was the breaking news. Here, I know some guys from the a Telegram channel heard this on the Squawk and entered in immediate longs, and some folks took profit 1465 on that first wave of buying. So that's, you know, what's interesting here is this is that key resistance level overhead on the daily chart, okay, this 1470 level, okay. So we've got price just, you know, really wishing itself higher here, moving up into that resistance level. Price has been tested once, twice, 3 times, 4 times. We've obviously got, you know, an inside bar, false break of an inside bar, got a push to the upside, a rejection of the 100 exponential moving average. Technically, price is wanting to go higher here. So, you know, a technical break above here, retest to go long would make a lot of sense. But we're waiting for a fundamental driver here. Okay, we're not just looking at the technicals. Technically, it's building to a bullish breakout here. However, we need to have a fundamental driver. We need to have some kind of breakdown in US-China trade talks. And if we get that breakdown, then we can see technically we are primed and ready to break out of this 1470 level and look at a break, retest, and moving back up to these recent highs, 1540, 1550 and beyond. So that is a very key chart to be looking at. So, you know, what I'd say and what I'm looking at the moment is I'm focusing on this the rhetoric between the US and the China trade talks. If the talks are going well, then expect gold to be sold. If talks are going badly, expect gold to be bought. So I'm looking at the gold chart. I'm looking at for a breakdown in US-China trade talks. That would be very supportive of gold. You can see, you know, from on a weekly chart, this strong bids that we've seen in gold recently. We've got this slight pullback here down to these recent levels here at 1440. So this is a ripe place for a, you know, a change in sentiment. So we really need to see that change in sentiment play out. So I'm not jumping in to any gold positions, but I'm just got my ear open on the squawk, waiting for a sentiment shift. Big sentiment shift, a big breakdown in trade talks, then you can see there's a very nice potential entry on the daily chart, good up to, you know, and then your first term target is up here, 1510. You've got a nice overhead resistance level that isn't too far above. Once this 1470 level is broken, then you're looking at 1510 as a first point of call. So that's just something to be aware of. That's what I'm focusing on at the moment. And in a quiet week, you know, as I said, you don't want to give back your profit to the market. You don't want to be just entering trades and finding trades that aren't really there. You know, the market is quiet, but the market has kind of told us what it's focusing on because we saw these moves in gold yesterday. Okay, so the market kind of said, look, we're concerned about US-China trade deal. We're focusing in on that. So that's why you can see these focuses on. Again, say you missed that initial move in the chart, in the gold chart. One way to kind of take advantage of these moves is trading the 50% retracement. So I didn't do this on this because the sentiment is too shifting. But say this was a clearer cut example. You've got the sentiment shift. You have a 50% pullback, and you can take profit back up at these highs again. You know, the 14720 level would be an obvious place to take a profit around this shoulders of this sort of head and shoulders pattern that you've got there. Just taking profit into those shoulder areas would have been, you know, would have been the obvious play for anyone trading gold back up there. I'm not getting into that now without a fresh catalyst, so I'm needing something new. Okay, what we also had, looking back, we had the RBA minutes out last night. Now, the RBA minutes were you know, had a bit of a dovish twist to them. They saw a case for a potential rate cut at the last meeting, but they decided to keep on hold but kind of the emphasis was we could have cut rates. Wage data is low, inflation data is weak. There's now seen as a 31% chance of a rate cut for December. The next meeting is 3rd of December, and so at the start of the end of the Asian session, start of the European session this morning, we were seeing some Australian dollar weakness for the session. We obviously had Australian dollar weakness on the US-China trade negotiations going badly as well. So remember what we're always trying to do, we're always trying to pair a strong currency against a weak currency. We always want to find currency pairs that are doing the opposite to one another. So looking at the information we've looked at here, with the pounds being supported and the RBA minutes. So I was looking this morning at a pound Australia dollar long position. I'll just show you what I was looking at now here, and you'll see it didn't pan out the way I was expecting. Now, I was looking for pound Australian dollar buyers because of the support with the Conservative Party expecting pound buyers, and bearishness with the Australian dollar because of the RBA minutes. However, what has changed this a little bit was the equity markets in Europe have been supported. So there's been some risk on tones coming into the market because there was a bit of a mixed picture. There was some positive comments about Huawei. There's been the negative comments about the pessimism on the US-China trade deal. So there's a kind of a little bit of uncertainty in the market. Now these pullbacks in the pound, there's also the television debate coming out tonight. So I was looking for buyers around this level here, and I'm expecting stops down here. So you can see that I'm just hovering from the sort of level I'm expecting stops. Obviously, if price retraces back down through there, that would be my cue to exit. If price does recover from here, then I'll be looking at 1.9040, 1.9050 would be my profit target up there. Now this is just being supported, the Australian dollar is being supported on these risk on tones. So the focus is going to be risk on or risk off sentiment with US-China, a trade war. So that's where we are with that. As I said, but it was a deeper pullback here than I was expecting, and that's something to do with the RBA minutes just being slightly not given so much importance given the risk on tones that we're seeing in the market. So what this confirms to me is that the market's really focusing on risk on or risk off between US and China trade deals. So the best trades setups that I see at the moment are not going for strong or weak currency pairs for the American session going forward. It's just waiting to see if there's a sentiment shift, okay? Because we're seeing some Australian dollar strength, New Zealand dollar strength. We're seeing some of that on the risk tone shifting. But I think to get a clear move, I think we want to see some more news and the US-China trade deal. So strong weak currency for the European session. It's the pound Australian dollar, expecting buyers on pullbacks. We've had that deeper pullback partly on a risk on tone, so it's monitoring that risk on tone. But the looking forward, rather than looking at a strong weak currency, it's focusing on the risk tone going forward. So looking back at the market, we've kind of looked at some of the key movers. The Asian session, we had a mixed bag. We had the Nikkei, which was down, and the Hang Seng was up. So just show you. So you can just quickly see here that the Nikkei was down 0.5%, Hang Seng up 1.55%, Shanghai up nearly a full percent. So we had this mixed equity bag coming out of Asia. we looking at the equity markets to show us risk appetite. When there's a falling equity market, we can see risk off. So we did have some risk off tones with the Nikkei 225 down 0.5%, but it was a mixed bag because we had the Hang Seng up 1.55%, the Shanghai up 0.85%. So there wasn't a clear picture there from equity markets. And then looking into the European session, you know, at the moment, I'll show you what we've got. We've got quite a good support here. We've got the FTSE up a full percent, Euro Stoxx up 0.42%, DAX up nearly a full percent, the Spanish IBEX up 0.5%, Italian FTSE up just 0.39%. So we've got some good strong support coming from the equity markets, and we've got some yields up. You've got the 2-year yields up, the 5-year yields up. So we are seeing some risk appetite into the market, but it's not like a massive risk on tone. But nevertheless, it is there, and we did have record highs with the US equities yesterday. So the risk is still there, but it's very sensitive, very tentative. Don't forget, there's a little snapshot into market correlation. When we've got stocks rallying, we've got bond yields rising. That's when we've got the risk on environment. When we've got stocks falling, bond yields falling, we've got risk off. And in those kind of markets, when you've got a risk on market, we have higher yielding currencies like the Australian dollar, New Zealand dollar, and Canadian dollar appreciate, which is what we've got working against that pound Australian dollar long I was looking at from this morning. This, this slight move towards a risk-on market has been supportive of the Australian dollar, and I was expecting the Australian dollar to be more negative after the RBA minutes out last night. So, the risk-on market is really showing greater influence on the Australian dollar than the RBA minutes, which probably is probably unsurprising, but we need to pay attention to that lesson and see that it's the risk on, risk off tone which the market is paying most attention to at the moment, rather than the central bank minutes from the RBA. So just learn the lesson, take note of it, and learn for next time. Risk off markets, this is when we get exactly the opposite for risk on, and we'll get yen, Swiss franc, and US dollar strength, Australian dollar, New Zealand dollar, Canadian dollar depreciate. So obviously if risk goes off, then we'd expect to see the Australian dollar lose value. So that may still yet be the case, but it's going to be the risk market that's going to really drive that. So for the Asian session, looking at the strong weak currency, I was expecting the weak to be the Australian dollar on the RBA minutes, and the risk off tone from the US-China trade deal pessimism. I was expecting a strong pound on the election polls. So I'm still expecting strength in the pound, obviously running into the event risk tonight at 8 o'clock GMT time and 9 o'clock GMT time. So that's roughly what I'm looking at. That's my focus for the coming few days. What trades are you guys looking at? Is there anything that you would like us to focus on? Any trades you've got? Any trades you're in? Any trades you're thinking of? Just have a quick just pop it in the question panel or the chat panel, and can have a look at it there. Just, yeah, Sammy, yeah, in waiting mode. I think that's exactly the place to be, just waiting for that fresh sentiment driver, particularly in these kind of markets. Yeah. Brent oil, let's have a little look at Brent. What is the... Okay, I've got US oil here. Okay, so sort of US oil is in consolidation mode at the moment, and I just saw some headlines coming out on the Squawk. There's sources saying that further oil output cuts at the OPEC December meeting, Russia's unlikely to agree to any further oil output cuts. So sources state that OPEC and allies are concerned over weak demand growth. Separate industry sources state that Russian companies are looking to increase output to support the state budget. Okay, so right. So this is, let's see how we're responding here. We're seeing a little bit of downside. There's a little bit of downside in oil, and that would obviously, if we get the risk off tones, we expect to see the oil sold. So if relationships break down between US and China, the trade deals, we're expecting weakness in US oil. Also, if Russia is not going to agree to further oil output cuts, and they want to ramp up production, then that's going to be negative for oil as well. Okay, so the two things that OPEC members will be worried that they'll lose market share, because they're thinking, well, the US might hike production levels if there's an OPEC plus cut to bring oil prices back down. So there's concern here that the OPEC members won't agree to any production cuts. So that's weighing on oil. US-China trade deal, if that breaks down, that will weigh on oil. So there's negative pressures on oil at the moment. You can see technically just moving around this 100, 200 exponential moving average, a close below here, and you're looking down to test this 55 handle, this key support level just down below where we had the 54 handle. So for me, there's nothing really there for oil for HANA. There's no particular new news. Even that OPEC headline is old. It's not particularly anything new. So wait and see on oil. That's what I'll be waiting for. Okay, Australian dollar, New Zealand dollar pair. Let's have a look. Yeah, this has been a really interesting pair. I was looking at this pair, and then we had this when the RBNZ kept interest rates on hold rather than cutting interest rates. So we had that sudden New Zealand dollar strength here. Okay, we had that. I remember I was flying at the time last week, and that was a real big unexpected move. I was speaking to one of the guys in the forum who was long going into this event and quickly exited, stopped and reversed, and was able to take a little bit of a chunk out of that upside move in the New Zealand dollar. Now, Hashik, what are you thinking here with Australian dollar, New Zealand dollar? Yeah, what are you thinking? See, if we look at the Australian dollar, we've got sort of a more bearish outlook for the Australian dollar with the RBA minutes coming out. If the US-China trade deal breaks down, it tends to impact the Australian dollar more than the New Zealand dollar because of the closer connection between China and Australian dollar. So, expecting this pressure to carry on the Australian dollar, New Zealand dollar pair. There's not a pair I'm really interested in trading at the moment because they're getting quite similar to each other. You've got a bearish outlook for both currencies. Yes, you had the RBNZ who kept interest rates on hold, but they're still going to be having interest rates low for an extended period of time. So I'm expecting more sort of more, if you had to put a gun to my head, I'd expecting more downside on the Australian dollar and New Zealand dollar pair, but it's not a pair that I've got a strong opinion on. Okay, EFAM, Australian dollar, Japanese yen. Okay, so this like the nice thing about this pair, EFAM, is that this pair is a really good risk kind of currency pair. So when risk is on, you can expect the Australian dollar Japanese yen pair to be bid. When risk is off, you can expect the Australian dollar Japanese yen pair to be sold. So the key thing with this pair, EFAM, you're buying it. Now, okay, you can be an Australian dollar Japanese yen buyer as long as the risk tone is on. As long as there's optimism about US and China striking a deal, then you can expect the Australian dollar Japanese yen pair to be bought. As soon as that becomes a negative story, as soon as there's concerns between US and China, then you can expect the Australian dollar Japanese yen pair to be sold. So it's sometimes seen as the go-to risk currency pair. So if you want to be trading just risk, then some traders will just say, we'll just buy or sell the Australian dollar Japanese yen. So whenever you're trading that, you want to be doing that. Now, Ethan, what was your reason for buying it? I can see you bought it yesterday. What was your reason for buying? Because if your reason for buying was, okay, there's some more optimism coming into the market, I can see that the equity market is picking up. Maybe there was some positive news out for Huawei overnight. I thought that would be, more optimistic for risk. Then, yeah, okay, I can understand that. But there was a big story out yesterday, which was negative for risk. So the key thing just to be aware of, EFAM, as I haven't got your reply, is to make sure you're conscious that you're trading in line with risk sentiment, because this is a risk sentiment pair. So just make sure that you're in line with that risk. Okay. Based on cautious risk mood at the time. Okay, EFAM, I've got you. So yeah, well, if risk tone is cautious, then you're more likely to be a seller than a buyer. Okay, so if it's optimism, you'll be buying the Australian, because look, if in a risk off tone, the Japanese yen is bought and the Australian dollar is sold. So that's why this pair is so sensitive to global risk. Okay, Sammy, waiting mode. Okay, just going through some of the questions here. Okay, Hashik, Australian dollar, New Zealand dollar short, looking for 1.0400. Yeah. Yeah, that does make sense. 1.04. So that's it's a much more of a swing trade. That's a large move down there. Just other targets you'd have is 1.0586 and then 1.0500. So you've got some key support pivot points down before you get to 1.0400, and you've probably got just 1.0434. So there's some of the key moves levels you've got on the downside: 590, 515, and 437. So just look out for those levels on the way down, Hashik, because those levels will be key levels. And particularly this one here, it's just below the 1.0400. So if you do get down that far, taking profit just above that 1.0400 level would make more sense, given the key pivot point you've got just above that big round number there. Yeah, no, that's fine, EFAM. You just got to be aware that this currency pair, Australian dollar Japanese yen, is a key risk currency pair. If risk is off, it's an Australian dollar Japanese yen short. If risk is on, it's an Australian dollar Japanese yen long. That's kind of the relationship between risk and the Australian dollar Japanese yen pair. So just, you can go back and you can look all these little moves, these dips and these picks up and fall down. All of that is going to be on global risk concerns, aka US-China trade deal. But as I said, for me, what I'm looking at is trading the risk tone in the US-China trade deal on the gold chart. This was the move yesterday. You see, it was quite a straightforward, strong move. Yeah, but it was about $20. 57, roughly $20 move in one direction. So if the risk tone is positive again, and we get good news about US-China trade deal, then we're going to see gold shorts. If it's bad news from US-China trade deal, then we're going to see gold long. So that, for me, is the most straightforward trade at the moment. And remember, the market is pretty quiet. There's not much going on. The only major event we got is the Canadian dollar CPI data going on tomorrow. So that's one that I will be looking at for trading the Canadian dollar. But back on, that for tomorrow. As for now, just keeping the squawk on, keeping my ears to the ground, listening for any US-China trade deal, and trying not to give back your profits to the market during these quieter times. Okay, guys. Now it's been good to be in touch. It's good to be chatting with you. That is the end of our webinar for this time. There isn't anything else to do. No one's got any more questions on any trade setups. So enjoy the rest of your day. Don't forget, you're welcome, John. Don't forget tonight, 8 o'clock GMT, there's potential opportunities for the pound. And don't forget the polls out on 9 o'clock, 1 hour after the ITV broadcast. So there is event risk for the pound. Be aware of that. It is a potential opportunity. Apart from that, just keep your ears to the ground, looking for any news on the US-China trade talks. That's likely to give us the best move for anything potential to come out of today. You're welcome, guys. Take care, John. Take care, Sammy. Look after yourselves, and I look forward to being in touch with you again shortly. Thanks now. Goodbye.